First quarter of 2026 is in the books, and I've got all the data right here. Today, I'm giving you the most complete picture of the Santa Barbara real estate market you're going to find anywhere else. Every major sale in Montecito, every transaction in Santa Barbara proper, the countywide trends, and exactly what all of that means if you're thinking about buying, selling, or investing right now. Diving right in. The median sales price for both Santa Barbara County in March 2026 was approximately 1.785 million. And that is consistent. January came in at the same number. February dipped a little bit to 1.675, and then March came right back up to 1.785 million. So if you compare all of that to 2025, where the annual median was 1.883, we're tracking about 5% below last year's pace, but this is the market that went from 500,000 in 1990 to 1.785 million today. A modest year-over-year softening after one of the biggest run-ups in modern real estate history is not a red flag. It's actually a breather. So the most important story here is what is selling and where. Let me walk you through the Q1 by the area. So through the first quarter of 2026, South Santa Barbara County recorded 327 total transactions. That's January, February, and March combined. And that's a whopping 5% increase over the same period in 2025, nearly 36% more than quarter one of 2023, which was the slowest market in over 2 decades. The breakdown is there were 89 sales in January, 107 in February, and 131 in March, which tells you the spring market arrived right on schedule. March is typically when this market starts waking up, and 2026 is no different. Of those 327 sales, 94 were condominiums, 233 were single-family homes, and about a 71-29 split, which is consistent with prior years. Now let's talk Montecito, because this is where the data gets really interesting. In quarter one of 2026, Montecito saw significantly across all 3 months, and the range of what sold tells the whole story of this little submarket. In January, sales ranged from 2,139,000 all the way up to 12,788,000 on Rometto Road. Notable closings included a home on Sycamore Canyon Road at 4.9 million, and then 734 El Rancho Road at 5.3. February brought some of the quarter's largest transactions, including a $14.5 million home on Para Grande Lane, 9.7 on Meadowbrook, and 8.965 on Sycamore Canyon Road. The ultra luxury tier, homes above 5 million, clearly active throughout the quarter. March in Montecito saw 15 sales with a median of $5.3 million and an average price of $6 million. The top sale was 14 million on Alston Road. The entry point was 1.785 on Plaza de Soñadores, which for context would be a well-priced home anywhere else in the country, but it is essentially the floor in Montecito right now. So the takeaway on Montecito is this market is not slowing down at the top. Ultra high net worth buyers are very active. They are cash heavy and not particularly rate sensitive. Thing to note, Montecito continues to operate in its own stratosphere. Santa Barbara proper had the highest transaction volume of any submarket, 59 sales in March alone, with an average price of $2 million and a median of 1.995 million. And so when you look at the full Q1 picture, the breadth of the Santa Barbara market is remarkable. On the condo side, you had entry points in the 5 to 700s, including 319 West Valerio at 520,000, and then units on Miradero Drive complex in the 650, 750 range. These are the access points into Santa Barbara homeownership, and they continue to attract very strong demand. In the 1 to 2 million range, which is the core of Santa Barbara single family residence market, we saw consistent activity across all 3 months. Homes on Cheltenham Road, Laguna Street, Portezuelo Avenue, Puesta del Sol, and Anacapa Street were among the active corridors. Sales in this tier ranged roughly between 1.5 million to 2.3 million. The upper tier 2.5 million to 5 million plus also had notable closings. There was one for 3.7 on Las Canoas Road, 4.2 million on Sunrise Vista Way, 5 million on La Vista del Oceano, and then 5.6 on Harbor Hills Drive, 5.9 on Campanile Drive, and a whopping 7.25 on APS, also known as Alameda Padre Serra. So the last one on APS is a road that has quietly become one of the most coveted addresses in the Santa Barbara proper, with its panoramic channel views. The 7.25 close is actually a very strong data point for upper end Santa Barbara. And what this tells us is Santa Barbara proper has genuine depth across the price points. It's not just a luxury play. There are real transactions happening from 520,000 to 7.25 million, which is what keeps this market liquid even in a high rate environment. The reason prices have held up despite the 6% plus interest rates comes down to one thing, and that's supply. Inventory in South Santa Barbara County sits at approximately 2.93 months as of March 2026, which is essentially 3 months supply. A balanced market consists of about 6% or 6 months supply. We are still less than halfway to a balanced market, and is what that means. And that means that sellers still have the upper hand, even though inventory has loosened from the sub 1.5 month levels we saw in 2021 to 2022. And that trend is worth noting because inventory has been rising steadily since 2002. We went from 0.66 months supply in March 2022 to 2.93 months in March 2026. And the market is gradually normalizing, but it has a long way to go before buyers can actually gain true leverage. The average mortgage rate so far in 2026 is about 6.38, up slightly from 6.06 in all of 2025 and sharply higher than the 2.65 average in 2021 that triggered the buying frenzy. So here's the honest reality of what 6.38 means. It takes real buyers out of the market, or it pushes them into lower price tiers. And someone who could afford a 2.5 million dollar purchase at 3% interest might only qualify for 1.7 million at today's rates. And that's a significant compression in purchasing power. And yet prices haven't collapsed because the buyer pool here in Santa Barbara isn't exclusively rate dependent, as we saw in the previous segment. As we just walked through, 37% of all transactions in this market were all cash in March, and that's pretty consistent. That's more than 1 in 3 homes sold with no mortgage at all. And so the wild card for the rest of 2026 is going to be rate movement. Every quarter point drop in mortgage rates meaningfully expands the buyer pool. So if we see rates move toward 5.5 to 6%, expect this market to get noticeably more competitive. 2 numbers that define who is winning in this market right now. First is cash. 37% cash. In March 2026, more than 1/3 of all South Santa Barbara County sales were cash transactions. And this is not normal. The national average hovers about 25 to 28%. And in Santa Barbara, especially Montecito, cash buyers dominate. When you're looking at Q1 Montecito transactions, you're looking at many buyers for whom a 6.3 mortgage rate is simply irrelevant. 20% asking price is that second number. 1 in 5 homes that closed in March sold above list price, and that means very competitive situations, multiple offers, escalation clauses, waived contingencies. They're still happening. Not in every home, but often enough that buyers need to come prepared. And that's why it is so key for this market to use a local realtor who knows this market very well. Oftentimes people come in and they bring their out of area agents and they don't get the representation that they deserve. So it's imperative that you come prepared with a local agent, first of all. But the profile of a winning buyer in this market right now is that they have a cash or a large down payment. They are pretty pre-approved and ready to go. I personally like fully underwritten. I've seen the competitive edge that gives many buyers in this market. And something to note as well, hesitation is very expensive here. So that's why it's so important to come to this market prepared. Let's break it down by property type for full picture. Single family homes, year to date median sales price is about 2.125 million, which is a decrease from 2025's 2.3 million median. The average price per square foot is about $1,327. There were about 76 single-family residence sales, excluding the luxury market in the month of March. For condominiums, the year-to-date median is 1.099500. So I guess you could say 1.1. It's essentially flat. It's only up 1% from last year's 1.093 thousand. The average price per square foot for condos is 1,019. There were 32 condo sales in the month of March. The condo market is showing remarkable stability. For buyers who are priced out of the single-family residence market, condos in Santa Barbara are holding their value, and they represent a legitimate wealth-building vehicle. The 11-year trend from 2016 to today shows condo median prices nearly doubling from 592,000 to 1,099,500. So on another note, the days on the market average is running about 46 days year to date, which is up from 33 days during the 2021 peak, but it's still relatively brisk for a market at these price points. So correctly priced homes move fast. So I want to zoom all the way out for a moment, because in real estate, context is everything. In 1990, the average sales price in South Santa Barbara County was $286,375. Today, it's $2,650,674. So in 36 years, through the S&L crisis, the dot-com bust, 9/11, the 2008 financial crisis, COVID, and now a sustained high rate environment, this market has compounded its way upward. There have been painful corrections, is the moral of the story. 2008 to 2012 saw prices drop roughly 30% from the peak, but every correction has been followed by a recovery that exceeded the prior high. So the current environment, where prices are running about 5% below 2025 peaks, inventory is slowly rising and rates remain elevated, which looks in that long-term context like a market consolidating gains rather than breaking down. So if history rhymes, the buyers who act in periods of rate-induced hesitation tend to look very smart 5 to 10 years later. Here's the bottom line. What does all this mean for you right now? If you're a seller, you still have the structural advantage. Inventory is less than half of a balanced market. 37% of buyers are paying cash and 20% of homes are still going above asking. If you're correctly priced, well-positioned, you will sell. But the market is less forgiving of overpricing than it was in 2021. And buyers have done the research and they will wait it out if you are priced too aggressively. They just will. If you're a buyer, there is more opportunity in this window than there has been in several years, because inventory is at a 5-year high. Prices are slightly off their peaks, and sellers are more willing to negotiate on terms than they were 18 months ago. So yes, rates are high, but the alternative, waiting for rates to drop and competing against every other buyer who's also waiting for rates to drop, has historically not worked out well in Santa Barbara. So if you're an investor or watching from the sidelines, watch the rates. That's the catalyst. Any meaningful move toward 5.5% changes the competitive dynamics of this market very quickly. So if you have questions about a specific neighborhood, property type, or price range, drop them in the comments. I read everything and I do respond. Make sure you subscribe so you get these updates as soon as they drop. I publish this report every single month, and I'll see you again next month. Cheers.